Hey everyone, let's dive right into this explainer. Today we're unpacking exactly how Palantir Technologies evolved from this secretive, kind of mysterious government contractor into what's basically the central nervous system of the commercial AI revolution. If you've been watching the AI space, you know we've already moved past the initial hardware phase, the one dominated by companies like NVIDIA, and we're now squarely in the software and application phase. But spotting the real winners there? Yeah, it's tricky. So today we're putting one of the market's most polarizing and frankly fascinating companies under the microscope, Palantir.
Check out this number, 145%. That is their staggering Q1 2026 Rule of 40 score. Now, in the software world, the Rule of 40, which basically combines revenue growth and profit margin, is the absolute gold standard for measuring a healthy, fast-growing company. Hitting 40% is great. Hitting 145%? That's almost unheard of. It proves their AI software isn't just a bunch of hype, it's generating serious cash and fundamentally changing how businesses run.
Here's our quick agenda for today. First, we'll look at their journey from the shadows to the S&P 500. Then we'll explore the AI ontology moat, followed by the AIP bootcamp revolution. After that, we'll crunch the financial metrics, dig into the bear case, and finally, give you the final investment verdict.
Okay, Section 1. From shadows to S&P 500, the corporate evolution. So, Palantir was originally co-founded back in 2003 by Peter Thiel, and it actually had early backing from the CIA's venture arm to do counterterrorism data analytics. For years, they were viewed almost exclusively as this closed-off, super-secretive defense contractor. But today, they've completely transcended those military origins. In September 2024, they officially joined the S&P 500, literally pushing out legacy companies and becoming a true institutional-grade asset for modern commercial enterprises. They've shifted the whole narrative from just being a government data integrator to becoming the operating system, literally the central nervous system for global AI deployment.
All right, Section 2, the AI ontology moat, defining the digital twin.
Let's break down their ecosystem. Palantir basically splits its world into three distinct parts. You've got Gotham, which handles government and defense. Then there's Foundry for the commercial side. And sitting right there at the absolute center is the Artificial Intelligence Platform, or AIP. This setup is their massive technological moat. It allows huge enterprises to securely run large language models on private networks without worrying about catastrophic data leaks. It's not just a simple chat window, it's a deeply integrated brain connecting every single piece of a company's data.
And that brings us to a crucial point. They aren't just selling a basic AI chatbot wrapper. They build a complete digital twin of a company's data. Palantir calls this their ontology. See, standard AI tools usually just search a database and kind of guess an answer, which, as we know, can lead to those crazy AI hallucinations. But Palantir's ontology takes all of a company's messy, siloed data and weaves it into a single, unified reality. The AI actually understands the specific objects within a business, whether that's a sensor in a factory, a route in a supply chain, or a complex financial record.
Now, to stop those algorithmic hallucinations from making disastrous automated decisions, Palantir strictly enforces what they call a human-in-the-loop governance model. This is key. The AI suggests an action, a human approves it, and then the system executes it. So every single AI action remains completely secure, trackable, and fully auditable. And honestly, that is absolutely non-negotiable for their massive clients in government, healthcare, and finance. Moving to Section 3. The AIP Bootcamp Revolution, a go-to-market masterclass.
Look, if you're an investor, a company's go-to-market strategy is absolutely everything. Historically, Palantir really struggled with a reputation for having incredibly heavy, complex software that took months just to negotiate and install. But they completely flipped the script. They replaced those traditional months-long conceptual pitches with these intense 5-day workshops called AIP bootcamps. They literally bring their engineers directly to the client and build real tools using the client's actual live data.
And the results? A 75% contract conversion rate. By throwing out the boring slide decks and actually building functional AI agents on the spot, they pulled off that massive conversion rate across more than 1,300 sessions in 2024 alone. Instead of just theoretically explaining the return on investment, they proved it in 5 days. This strategy completely exploded their U.S. commercial revenue and let them rapidly break into industries from healthcare all the way to manufacturing. Section 4. Crushing the financial metrics. The Q1 2026 reality.
You have to see these numbers because Palantir completely crushed consensus expectations. We are looking at unbelievable hypergrowth fueled by commercial AI adoption. Quarterly revenue hit over $1.6 billion. That's up almost 85% year over year. Net income skyrocketed over 300% to $870 million, and free cash flow just exploded to over $581 million. Seriously, this is a company that is definitively morphed from a cash-burning startup into a highly profitable money-printing machine.
When you combine that 85% revenue growth with 60% adjusted operating margins, well, that's exactly how they achieve that crazy 145% Rule of 40 score we talked about earlier. Hitting this level of profitability in the enterprise software space, it puts them in an incredibly rare elite tier of tech companies.
Throw in a bulletproof fortress of a balance sheet. We're talking over $8 billion in cash and zero, yes, zero long-term debt. And you're looking at a company perfectly insulated against macroeconomic shocks. Plus, their net dollar retention rate is sitting at a massive 150%. That means existing customers aren't just sticking around. They're rapidly expanding how much they use the platform every single year, because the vendor lock-in with Palantir's ontology is just that strong. Management is so confident, they even raised their full-year 2026 revenue guidance to reflect a 71% year-over-year growth.
All right, Section 5. Understanding the bear case, risks, and vulnerabilities.
To be totally objective here, we have to look at the risks, right? No company is immune to headwinds, and Palantir definitely has some distinct vulnerabilities. The most glaring one is for sure their valuation. The stock is currently priced for absolute perfection. Trading at a forward PE ratio of 78, any slight miss in future earnings could trigger a really severe pullback. On top of that, their legacy government revenue can be, well, lumpy, meaning it's heavily subject to bureaucratic delays and shifting defense budgets. And we really can't ignore the fact that executives have been doing some significant insider selling lately, over $137 million worth. That definitely adds to the market's anxiety about a potential top.
They're also facing some real structural headwinds. For example, they've been dealing with intense political pushback and protests regarding vendor lock-in on their massive £330 million contract with the UK's National Health Service. Plus, they face stock volatility triggered by open-source copycats. Just a few days ago, on July 22, 2026, a free prototype called World Monitor dropped on GitHub, basically mimicking Palantir's tracking systems. Now, even though it wasn't enterprise-grade by any means, just the fear that cheap open-source AI could erode Palantir's pricing power was enough to make their stock drop 6% in a single day.
And finally, Section 6, the final investment verdict.
So we have a really rare convergence here. On one hand, you have undeniable technological moats and just explosive commercial cash flow. But on the other hand, you're looking at a company constantly battling extreme valuation multiples, insider selling, and some very real socio-political friction on a global scale.
Because the reality is computing power and basic AI intelligence are getting cheaper every single day. Palantir's CEO actually recently said that AI tokens are the new coal, but Palantir's AIP is the train. So I'm going to leave you with this final thought to guide your own research. When AI intelligence becomes cheap and totally commoditized, is Palantir the only enterprise operating system out there with the security, the ontology, and the execution to actually turn it into profit? Thanks so much for hanging out and exploring this with me today, and I'll catch you in the next explainer.